Hey everybody, sorry being a couple minutes late. What a morning. What a day. We had a couple roofers drop in yesterday, unannounced, actually into the house, that is. So, not always so cool. Anyway, good morning, good morning. Infinity, Everett, Dex, Michael, Arturo, Mark, Sergio, David, Alan, JB, Rungamer. Glad to see you, everybody. Donald, Jaquise, Penny, Darren, TT, Craig, Brian, Cliff, Carla, Gary, Michael, David, PD, Peter, Michael, Francois, Kimberly. She loves doing. You like to know about, like, there's people that like jury duty, babe. You know, uh, some people like to try to find out what the crime is and what's happening. Anyway, Dave, Tony, I don't recognize your name, Tony. Welcome, Tony Locke, and Maurizio, Allen, Gregory, Carlene, Mahalo, Arthur, Mark, Terrence, Pat, Don, Tara, Ray, Arthur, Anderson, USA, Merle, Harry, Jan. If you want to chat with me like all these fine folks, all you got to do, hit the subscribe button right over here, and you can chat with us right on the live stream. Just takes a few seconds. Hey, Ryan Wilson, don't recognize your name. Welcome to the live stream. Welcome. And, yeah, glad to have everybody. Jan, welcome. So, yeah, market's showing up a little red this morning. That's true. True, totally true. And, this whole thing, this YouTube thing, it requires audience like you. I appreciate the 100 people on the stream already. And you know what? To grow, though, I need you to interact with the video, chat with me, give me thumbs ups, hit the stars, hit the stars, hit the hearts, the all the little things that they got. If you interact with the video while I'm going, I say things you like, interact, then YouTube helps me go to a bigger audience, and we can keep this party going because good, bad, or ugly, it does take money to for me to do this and support my family. And when you show that love to the channel and the video, it goes out to more people, more money, more, all the things. So thanks a lot, everybody. Thanks, David. Thanks, Larry, Valerie. So make sure you hit the thumbs up while you're watching, and I do have a cool little dashboard now that shows me how many people are watching. So I have a Elgato Stream Deck if you're nerdy about tech stuff. It's got all these cool like screen buttons, and one of the buttons, YouTube released a plugin for it, and I can program a custom message. I don't know what it's programmed to do, so I'm not gonna hit that, but I can see how many people are on the stream too. So it's also how I do the fades and the switches and all that stuff. Like when I'm dumpster firing, and which that was premature, but I'm just showing you. Anyway, back to it. So this morning, where are we, right? All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything. No stocks, no options, no bonds, no cryptos, no futures, no forex. Don't buy them, don't sell them. It all involves a substantial risk of loss. And if you desire that personal financial advice, you got to hire and consult a financial advisor. So the calendar this week is rather devoid of much of anything going on this week. So that was the calendar for next week with the CPI, PPI, FOMC meeting. But this week, relatively benign. Relatively. Here we are Tuesday. We do have some ISM services, PMI, and JOLTS job openings coming out at 10. So we may see a little reaction at 10. Hey, Chris, good to see you. Beth, good to see you. El Gato, E-L, it's like El Gato, like the cat. El Gato. I use an El Gato mic. It's up here. I use a El Gato Stream Deck. So pretty handy stuff. Yeah, Kimberly got it for me. So it's the XL. So it's got a lot of buttons. Pretty slick stuff. But you got to have like software. I mean, other people that do this are like, how do you do all this stuff? And I got a green screen behind me. That's why you can see the screen. So, I mean, it's a whole production thing. It's almost like being on TV. What? Anyway, I do appreciate each and every one of you tuning in today, and just throwing that out there. I am thankful for all of you. Now, Mara, popping right up, getting into the zone, the resistance. I know a lot of you have been following me on Mara for a long time. I've been hyped up on this for as long as I've been a guru. Actually, before I've been a guru, I do have like $250,000 tied up in this play, expecting this thing to go much higher levels. Right now, hitting the resistance. This is a potential measured bounce setup. And if we break on out, we could be talking about big levels. Big levels. Look right here. Just for a feeling of what I'm talking about. Yeah, triple digits. So now, a lot of people are like, well, JT, you say one thing and say another thing. Look, this is a weekly time frame. This is big picture. This is years. All right. I'm in this for the long game. Literally long game. I am long in it for the long haul. And it does have loftier targets, but there's a lot of things that have to go absolutely correct, absolutely right for this to happen. So right now, looking for this to happen. Could it hit a hiccup on the way? Yeah. Could it meet ultimate failure? Crush my hopes and dreams? Yeah, it could. That's why you should never risk money you can't afford to lose. Right there, substantial risk of loss. I have that $250,000 tied up in this. This thing could go bust tomorrow. I'd be pretty upset. All right. But it's not going to put me out of the game. I have other money, other resources, other things going on. This is, it is a substantial position. I have a lot of my family's money tied up into it, retirement accounts and whatnot. But even if it busts, even if it went bust, it's not going to crush. Like, I'm going to be disappointed, but it's not going to crush anything. Like, I'm still going to be okay. I will still be okay, Marty. So I just want to throw that out there. Like, if you got to keep your time frame in mind. My time frame is years. Like, I'm out here. I'm trading for this. I'm not trading for what's happening here or what's been happening. I got it back over here. We wrote it up. We wrote it back down. And now we're going to write it up even more. So keep your time frame in mind. That's kind of my lesson for the day. What time frame are you operating on? If you're operating on a trade that you expect to take weeks, don't make decisions on a 5-minute chart. All right? Just throwing that out there. We are looking a little bit red today. Now, S&P 500, we got a little turn down. I did book that profit yesterday on spot. We got a little turn down. Now, one little turn down, I did speculate that we'd probably spike it and then reverse. Now, a few red days, that's okay. I do expect a 3 to 5% pullback. We've talked about this, seems like ad nauseum. 3 to 5% pullback, 3% going to be somewhere around 44.50. All right. Now, I was talking about the Algos and the thumbnail, all the stuff. Well, look right here. This is from Goldman Sachs Trader Desk right here. Goldman Sachs. This is a computerized trading algorithm estimate in the S&P 500. Where do you get these cool charts? You got to subscribe to something that gives you this. I get it from a Zero Hedge Premium subscription. That right there, flat tape. So you kind of have to understand what they got going on here. Down 1 standard deviation is orange. Down greater than 2 standard deviations is yellow. This is algorithmic positioning. And up. So black is up 1 standard deviation. Red is up 2 standard deviations. And blue, which you can see, the blue that's historical, is the realized market and flat. Flat for the projection. So right here, we're at the beginning of December. We're projecting out to January, that first week of January. This is algorithm positioning and what they think that the algos are going to do based on, models. And there's some super smart nerds that come up with this stuff. So right here, even in a flat market, they're expecting a little bit of sell on Algos. Even in an up market, 1 standard deviation up, kind of a sell. Up 2 standard deviations. Actually, we start to see a bigger sell. You can see the red below the black and blue there. Somewhat hard to see. It could be a little hard to see. Maybe we zoom it up and try to just pan it over. I don't know how to get, there we go. See the blue just above the black, just above the red. Now, if we get that down 1 standard deviation, the orange, they're going to go flat, is the estimate. If we get down 2 standard deviations, they're going to liquidate $50 billion. That's going to put us back, see where we were in October. And they went long and then dumped it. So look, that market up and down. Let's compare that to the S&P here. What did we do mid-October? Up and down. See that bump? Up, down. Look what the algorithms did. Up, down. So if they go for a big sell, that could put selling pressure in the market. This is just Goldman Sachs estimate. Bank of America tends to be the most accurate. I haven't been able to get a hold of the Bank of America. Their algo projections usually tend to be more accurate than Goldman Sachs or JP Morgan's. So take it with a grain of salt. This is just one quant's estimate on what's going to happen. I usually try to compare them across the different trading desks and see, like I said, the Bank of America ones tend to be more correct. So we'll see what happens here as we move forward. But there we are, more down, 3 to 5%. That's 3%. 5% would take us right down near the roadmap line. And we have this downtrend of highs rolling right through here. 5% would go tag that downtrend line. Roadmap line coming up right there too. So, yeah, that could be an interesting situation, right? All kind of meet together right out here mid-December. Somebody might have said we might do that. I don't know. Maybe you're watching. Glad to have 140 something people on the stream. Give me a thumbs up if I say anything you find beneficial or, heart, whatever it is. Interact with the video. Let me know. Give me feedback. You like what I'm saying, you don't like what I'm saying, you got questions, throw them in the chat. I appreciate it all. All right, so that's the S&P right there. That's kind of the potential path. I think we're going to get a pullback. Now, could we pop it? Yeah. 47.18 is the target on the upside. If we break out, we go through these highs, we go through this zone right here. Where does that zone come from? Dun, 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 dun. Comes off of this high from March of 2022, where we rejected right there. And you pull it on back, it's been a zone of chop. It was a zone of chop before we popped. That was, what, November, December of 21. So we're still in the same ballpark we've been in for 21, 22, 23, 3 years. Haven't gone anywhere. So if it feels like you haven't made much progress in the market in 3 years, welcome to the party. The market hasn't gone anywhere in 3 years. Just been sideways and pulled back, came right back. Been stuck here for a while. And significant resistance, obviously. We topped out here, we topped out here, we topped out back here. This has been a significant resistance zone for years. Just zoom out and look. Topped here, topped here, topped here, topped here, topping here. If we break through, probably going on up. But do I expect us to just get through this attempt? Probably not. We're probably going to retrace again before we can pop through. We see the same pattern over and over and over. So, this pullback right now could last the rest of the year. Could. That when we zoom it up and look at it, though, it best aligns with somewhere around the middle of the month. This roadmap line coming up through, this coming down, like it all kind of, the confluence of levels all kind of comes together. Now, could we that key resistance zone I had, could we find support there and the roadmap line come on up over there? Yeah, so that's why it could last a little longer. So be careful on your timeline. This could be over here in January. Look better if we did this. We went up so fast, come on right back down, make perfect sense. Could we stop right here? Yeah, absolutely. Could we stop up here? Yeah. I mean, the 3% at that 44.50 area, that could work too. We might pull back to there and then launch off. I would kind of expect us to hit the top of that box, that key resistance. So that's the potential path forward. I do give higher probability to a pullback because, look, that was one big fast move up. Wicked, relentless move up. A retrace would be highly expected after a move like that. Moving on. S5FI hung out, closed the day over 80. Over 80 is just a countdown. Like, could we pop it a little higher? Yeah, we did back here in July. We got a little higher, up to 89, and then we rolled. And we rolled all the way down to October. Got a little bearish, and then we popped it. And why is the chart skewed? Because it's in log mode. If I put it back like that, you see it's more balanced. Right there and right there. So extremes, over 80, below 20. Those are the extremes. This is like the easiest oscillator ever. S&P 500 stocks above the 50-day moving average. S5FI. It even has a ticker. So when we're over the top, we're going to pull back. When we're below the bottom, we're going to rally. Simple as that. Wrongiver's son last night, hilarious. Right before we left the meeting, he goes, sell it all. He's like, Apple, Microsoft, whatever, it's all going to zero. I told him he should come be on the live stream with me because that was pretty hilarious. It was a funny conversation. Anyway, and then he told me I was crazy for ordering a Cybertruck. So he's like, so you ordered a Cybertruck? Big deal. Didn't know he was so opinionated. Anyway. ES right here. This is S&P 500's futures. If you've never seen this before, ES1 exclamation point on TradingView. And if you're on a different platform like TD Ameritrade, you push slash, put a forward slash, ES, pulls right up. You're on E-Trade, pulls up like that. You're on Tasty Trade, pulls up slash ES. So slash ES is more common, but in TradingView, ES1 exclamation point. And I speculated that we may see a head and shoulders pattern here. So far, starting down in the shoulder. So we've got the shoulder, the head, and the shoulder inverse potential. If we complete it, we could break out and see an outsized upside. Could take us up to 5,000. So this pullback would align many things in the market to a potential large upside. Look pretty sweet. NQ was not participating in this last rally here. We're showing some acceleration, and we may plummet right on down. And if you're not familiar, in Q, one exclamation point is the futures for QQQ, the NASDAQ right there. I mean, just kind of heading down. This could be another head and shoulders right there too. I'm not going to muddy up this chart with it, but you can see it right here. Shoulder, head, shoulder, and if we make the neckline up through there, you can see this one's going to be way up there. So we could definitely see an outperformance on tech. Oop. Definitely see an outperformance on tech. There we go. The mouse got stuck for a second. So shoulder, head, shoulder. And this one could be kind of deep. But if we fill it out, watch out for that to go. I don't know. Doesn't look as clean as the S&P. Russell, interestingly enough, popped way on up here yesterday, showing a little spirit yesterday, even on while S&P and NASDAQ were showing a little weakness. If we can get up to that 1900 level before we pull back, it kind of starts tilting this thing more to a bullish setup than a bearish setup. So definitely got my eyes on that one. as far as where we're going to get to. Why 1909? Because that's the 1618. Corrections don't tend to go to the 1618 as much as trends. So this could be the start of a new trend. And if we get a pullback off of that level, we could see continued bullishness. If we kind of, the corrections, 1272 is kind of like a toss-up, 50-50. If we had just stopped at the 100 like we had earlier with that three-wave move, that was very bearish. And I was actually put on some protective positions just in case Russell, small caps, RTY, IWM, if you're looking for the ETF, just in case they rolled over. At this point, it's starting to look more bullish, but we got to finish. We're just like 3/4 of the way to the race. We got to finish it up, complete the pattern, get the pullback. So, we're stuck in this funky zone. I don't know who might have talked about that. Oil, right back down to the bottom, right back on the trend line. If it can get out of this zone, we're going to go. And it's going to go higher. If we break down below this support, we're probably coming on down to this $70 area. And then if we break below 70, my line in the sand's kind of like 69, really. We get below that, we could come on down to the 50s. But one thing at a time here. We're still holding support. We're still riding above that trend line. That trend line got started all the way back here. Not that long ago, but it was back here in October. We were riding on the bottom side. We broke through, kind of muddied it up, popped above, riding on the top side. If we can pop above the roadmap line on the daily here, which if you want the roadmap line, you don't have the roadmap line, you go in my YouTube archive, the thing where I'm like, hey, there's my favorite indicator like this, or you hit the link in the description for $5. You can just click the button and put it on your chart. Anyway, and you can get on Discord and come chat with me. So gold tagged the target that I've been talking about for, since June or whatever. We tagged it yesterday. Actually, I guess it was Sunday night when nobody hardly was trading. We popped up, tagged it right at that 2150 area. And now we're likely to pull back to the roadmap line. So yesterday I liquidated off my gold position. I think we're probably going to get the deeper retrace here. Probably. Clear some fib lines here. That worked beautifully. But the caution here, this could be just a three-wave move up too. So this could get a substantial retrace. How substantial, you say? Pull this from the bottom to the top. We could come right back down to the 618 level. Right back down where the roadmap line might be. Confluence of levels. All these things kind of come together. So it would not surprise me to see gold come right back down there. Now, interesting right here. See that move? And that move? Look how similar size that was. So this pullback right here, it's just a simple way to do it without using all the fibs and all that junk. You can just draw lines and compare. So that move is this correction is already bigger than this correction. So we're looking for something bigger to compare it against. Could it be this one over here? Oh, look, takes us right back down to the roadmap line. That drop came down in that zone. That would take us right down in that area I'm talking about. Could be out to late January, maybe February. Could go faster, could go slower. That's how fast that one went from back here in May down through June 30th. Right now, we're already on a faster trajectory. But that bottom zone may be right down around there. So prior targets, prior moves. Pull a few of these off. So we may be in store for something right down in this area right now. If we get to there, we can find a bottom in gold. Bitcoin, be careful. This 42 to 45 area, probably significant resistance. Don't expect much over 46 right now without a pullback. We did break up out of this channel. That's a huge opportunity to come back down in the channel, or at least retest the channel from the top. Be careful chasing Bitcoin right now. While FOMO, I did expect FOMO to start kicking in above 40, and we kind of went from 40 to 42 like in a blink. I thought we would see that. The FOMO may or may not be done. They're a highly less probable. I don't know how to say it properly. A very low probability event would be that we see a FOMO squeeze that would take us right up to that prior high, pre-halving. And this is the ETF, spot ETF deadline for ARK right there on the 10th of January. This over here is the halving event in April. So we have several catalysts coming up. We could see some sort of FOMO squeeze that takes us back up to the prior high area where we topped out a couple times. Right over in here. But then we could pull back pretty violently. If we do that, we're likely to do a big up and a big right back down. So be cautious there, all right? I would much rather see this kind of top out in this 46 area, pull back, and then roll. So, all right. Ethereum coming up just a little shy of the target. Got really dang close on the futures there. Do expect that to tag 2,300. If not, break on through and get to 2,500. Dollar looks like it's going to go test the roadmap line again. Like I said, probably pop back up there, test it. If we can get above it, we could go higher. If we get below it, and did bounce off this downtrend line, if we come back down and crush, we're going lower. If we get below the trend line, if we just pop on up above this resistance zone at the 618, right around that 105.50, we're probably going on up. All right. As far as what's moving today, GitLab, big pop, and then dropping right back. Now, somebody asked in Discord about healthcare. It's XLV. Let's just talk about it here this morning, really quickly. Roadmap line pattern. What is does anybody know the first requirement of a roadmap line pattern? The stock's got to be in a trend. All right. I know a lot of you on the stream know what I'm going to say about this right here. Look at that chart. Look at this chart. Who knows what I'm going to say about this? I know there's people that know. Sideways chop. Exactly, Valerie. Exactly. Look at this. That's not a roadmap line pattern. Breaking above doesn't mean anything. That's right, Gregory. Flat, choppy, sideways garbage. Don't get involved in this. Right. PD, why bother? Why do you want to get involved in this? Like what says it's not even a watermelon seed squeeze at this point. It's just, I mean, it kind of is, but it's just chop. I mean, just we had high volatility. Now we're getting lower volatility. It's not like, I mean, it's squeezing a little bit, but it's not, I mean, it's just, box of pain, right? Look, I mean, the bottom 116, the top 139. That's not even a big range for something that's in a $130 area. So no trend, no just sideways chop. It's not like, hey, it broke above the roadmap line. Like, it's time to get long. No, like, there's nothing. Like, it's flat. It's just, don't mess with that. Oh my gosh. Like, back here was the opportunity. Look, I mean, this is what we're looking for. Trend. Touch the roadmap line. Trend. Touch the roadmap line. Trend. I mean, that's the kind of stuff we're looking for. When we go flat, this can continue for a while. And then what was the trend before we got here? Up. what happens? What tends to happen when we get up? We tend to go back down a little bit. So this could be the consolidation before we make another leg, or it could be the consolidation before we pulled back. Breaking out the top would be higher. Breaking out the bottom would be lower. So the box is uninteresting for now. Breaking out the top could go higher. Breaking out the bottom, we could go substantially lower. Everybody clear? So that's why healthcare hasn't, I don't talk about healthcare a lot lately, because it's kind of been in a crappy sideways since December of 21. Going nowhere. Now, there's individual opportunities and horrible dumpster fires. I mean, see if I remember this chart. Yep, Cigna. Look at how horrible that looks. I mean, look at that. Look, it's a lower high. Charlie Victor Sierra, CVS. Look at that horrible nightmare. I even used this one as the example when I did the market roadmap class in the beginning. Still below the roadmap line. That's no bueno. And it's sideways at the bottom here. Sideways at the bottom. Whew. Now, something else that looks pretty all right. Look at UNH. Potential to break out here. We're pushing higher. So it's not a universal. Just because you look at one of the ETFs and it's like, oh, sideways crap, that doesn't mean there's not opportunities or complete dumpster fires involved in there. So you got to be selective on your healthcare. Everybody cool? Everybody clear? If I said anything that was beneficial about that stuff, give me a thumbs up. I appreciate it. Or give me some hearts, whatever it is that you interact with the video. So CVS was on the list this morning too, funny enough. So, all right, FERG, Ferguson, popping right near that 178, may pull back. 178, 186 targets. That was a roadmap line. Look, uptrend, pulled back, pushing out 170, 1272, 1618. That's the upside targets, and we may pull back and pop, or that could be the end of the trend, like it was on Walmart. Walmart's the most clear, the most in my mind. That one popped the 1272 and then crushed. So we don't always get an extension. That 1272 is the 70%. That's like the 40%, and that's why you should book profits as we get there, because ouch, we get those pullbacks quite often. SOAR, oh my gosh, what a nasty chart. Gambler's paradise right there. Look, that's what I always say. Look, when they pop like that, likely to come right back down. That one did it. Pop 30, came right back down. So potentially made 3 times your money and then potentially lost 60-something% of your money. Be careful. That's Smuckers, SJM, and this one. They were on a path earlier, and now that's a little deep for a measured bounce. Although the fib line is not at the bottom for some reason. There we go, better. So holding a potential measured bounce. Holding. I talked about it back here. I thought we'd retrace, and retrace we did. So now, what does JT want to see? First off, go from the high to the low. For some reason, that high is not attached. Makes it even better. Market roadmap bounce. We've got resistance right here. There's a big gap down right there, and the 618 level hanging out right there. We get above that level. In fact, I'm going to put an alert here, and this might go on a big up if it gets its crap back together. Opportunity for this one to really outperform. high, low. So we could see a potential 172, possibly 200. Doing the fib lines two different ways. So this would be a conservative target. Right in there. And this would be like a fairly aggressive target. More aggressive. Super aggressive would be 240. And that confluence of fibs right there is another level. But that's got to get above this resistance. It got to get above the roadmap line, got to get above that resistance. So it's got some work to do. Buy it now? Shoot, no. Wait for it. Just wait. Bill. Well, that's an ugly chart. So close to the target down there. Wonder why all my targets are kind of off the fib lines. Everything moving around lately. Came up a little shy. I mean, that could have been could qualify as a hit. Retrace back to the 100. We could get the extension down to the 1618. It would make sense. While we did go lower than the IPO here, usually we do some corrective junk, and that could be a little bit of corrective overexcitement, and we could correct right back down lower than the lows we made right after the IPO at 24, find a real bottom, and then start some progress on Bill. APLS, that's a gnarly chart. Sideways, increasing volatility. Biotech, pharma. Golly, that's a dangerous chart. TMF. That looks like it's going to come hit the roadmap line. This is leverage. Be careful. Leverage doesn't always follow patterns. GIII. G3 apparel. I'm not even sure what they make. I mean, obviously apparel and footwear, but it's not a brand that I recognize. It's kind of sidewaysy, but the local here in 2023 is actually an uptrend. High to low, we're reaching the 3618. That'll probably retrace. Looking at that correction, probably on a weekly chart. Yeah. Weekly chart doesn't make it look better. Man, we could be on a path to get to 41. The bigger correction, the much, much bigger correction. Yeah, that was a 3-wave, and that's a potential 1-2 in place there. And 1, 2, 3. Just clean this up and talk about it briefly. Look, this right here came up a little shy. Of course, that would have had to go negative, so I'm going to have to put this in a log mode. Come on. There we go. Much better. That retraced. Oh, yeah, way deep. That was a correction. That was a potential 1-2 off the low. 618 measured bounce. So if you're in the long term, that one potentially go up to 150 to 300 area right up here. But it's going to take a while. Like a while. Look at that move right there. We could be talking 2026. Yeah. High-end fashion group. Yeah. So could be a while. Nothing I wear, right, Kimberly? Nothing I'd wear. So CVS, we already talked about CVS and the fact it looks pretty horrible down here, consolidating under the roadmap line in a sideways choppy fashion. CRMT. America's Car Marts. That's not looking positive. Another chart. Why do you want to get involved in that? Looks like it could go lower. REPO. Actually, you gonna start putting me in fancy clothes? That looks like it may go further down. Biotech, pharma, be careful. These can just announce some stuff and FDA approvals, denials, and do some crazy event. Oh, that one did hit that. Look at that. I saw it right before I clicked off. It was so far down there. Look, it actually got right down in there. I thought it was a volume candle. Could find a bottom, but it could also go out of business. TT, take two. Looks like it hit the 1272, retraced to the 100. Now the next target could be the 1618 if we don't drop below that topping action there. So this was the breakout price action. See how we gapped up above it? If we break back below it, we're probably going back to the roadmap line. If we can stay above it, that 1618 up there at 168.40, 165 area, let's call it. Just be conservative on your target. DBI. Yeah, they own Levi's. Okay. I thought Levi's owned Levi's. DBI, designer brands. Oh, yeah, I don't wear Levi's though, so probably have a pair somewhere. Probably none of them fit. I'm willing to bet. Well, that correction could be done. Measured bounce potential. We get back above. Really need to break it back above this the $12.50, $13 area to go higher. So it left a gap down. Like this is why I'm always cautious about these gap downs. Look at this. See what it did, right? We did the gap down, made a bottom. Oh, this looks pretty good. Pop. Oh. Resistance, resistance, resistance. Drop. Didn't fill the gap. So respect the gaps sometimes. A lot of times. Gaps can be significant resistance going higher, especially on some of the stuff is beat down. Sphere Entertainment looks pretty weak. Looks like we're going lower. ALB, the list for bad stuff was much bigger than the list for good stuff today. ALB, continuing on down the toilet. It didn't even get close to the roadmap line. That one's going on down. Probably. PDD. Looks like some topping action there. I'd like to see it retrace that gap before continuing higher. That's a potential echo of some of these other corrections back here. And my stomach just made a weird squeaky sound. SSNT. If we break above that prior high, we might go up, but I would be very cautious. Very, very cautious. That popped right up, tagged that prior high. We could definitely make a lower low. It may not, but it could. Could it break out? Sure, it could. EDU. This one keeps being on the list. Probably going to find some resistance right up here. Where it was the highs, it was the low, and we plummeted from it. Probably come up there and test it. NetEase. Man, a lot of the same tickers keep showing up day after day lately. We've seen that a lot on the market morning monster list. I guess it's what's in favor, what's out of favor. NetEase came right back to the roadmap line. Beautiful retrace. If. So here's the new trade. Potential new trade. Got to get above that right there. Break out above that, 122, 128. FNGU. Hey, turn positive. Market must be turning around a little bit. It's interesting. 3 times leverage on FANG. So we're seeing Magnificent 7 fangs. Show a little strength today. That's what that tells us. But be careful. SW in SWTX. That's a biopharma. Zoom it out a little bit. And why do you want to mess with that? EVH. Another healthcare, biopharma. Be careful. That's a gnarly chart. Gnarly, man. Coin. Target was up here at 165. I liquidated off with my 1100% gain, and I'm just kind of waiting. There's nothing high probability. We could pop it on up to 165. We could retrace it back down in this zone. Be careful. I stepped off. I didn't have a lot of time left on my contract. I only had like 40, I think I had 46 days when I closed it. Be careful. All right. Could we pop it to 235? Sure. Would it look a lot better if we retraced it? Gave another opportunity? Yeah. Spot. Stepped off of that one. Booked that profit yesterday. Came right in the target. I mean, look at that. And for those of you who think layoffs are bearish, I mean, look, they were going to lay off 1,500 people, and that's actually reducing cost for a company. So that means more earnings per share in the short term. That's why things tend to pop when they announce layoffs. That's less burden paying people. That's less payrolls, less payroll taxes, less benefits, less exposure. I mean, so a lot of cost savings in the short term. Less people, though, tends to mean less output if you're not increasing your efficiency, which can ultimately result in a retrace. Might we get to 215? Maybe. So that's another beautiful one that worked out, though. I traded it here, liquidated off, got back in, and traded it to there. Awesome trade. Baidu. Rejected off the roadmap line. Not what I wanted to see, but still holding that one long for now. That's a 618 retrace, little mini measured bounce inside the bigger measured bounce. This one could take us up. All of a sudden, we can see this pop right up into this zone, right where I got an alert, right at that 150 area. Got to get through the roadmap line. Got an alert there. Got an alert here at 140. Got an alert up here at 150. And if we actually break on out, we could be heading up into the 300 area. So watching. I'm keeping an eye on that one. Keeping an eye on that one. Got a good potential, but it's got to do some stuff. It's got to get some upside targets. So, all right. And good grief. So employment openings, 8.7 versus 9.4. Big miss. PD says in the chat. Go refresh it. Yeah, 8.73 versus 9.3. Big miss, but look at the trend. We can see where this is going. Just draw it on down. Probably heading on down. No surprises there. And look, this is like the biggest peak we've had. Pop. That was a little exponential. Probably going to come back down. Probably be down back around 5 million. All right. Expectation for today. Cautious still. Could we pop another high? You betcha. Does this have to be the correction yet? No. Could we pop on up? Break higher than, this daily candle was still higher on the actual candle. On the simplified daily closes, we made a daily close higher than daily close back here. But we still left something unresolved here. We didn't pop that 4607. So we may pop 4607. before we roll. Could this last into next week with the FOMC meeting? You betcha. Could do that before we do that. Be careful out there, all right? There's no has to do anything. All right? Be careful. Be careful, be careful, be careful. Now, I have a 30 minutes of awesome show coming up at 5 p.m. Eastern. Make sure you subscribe. Make sure you hit the bell with the notifications and bring your requests to 30 minutes of awesome. My chart of the week last week was SYM, and it's still doing what I expected to do. There's most of these have taken a month or so to get going. That's given everybody plenty of time to get in. Target's still 73. I didn't give it any timeline, but probably a month or possibly month and a half. I'm in shares. I'm not in options. I did initially get some options, and then I closed them back off. It was just too much risk. It actually increased in value while the stock price retraced a little bit, and I was like, that's some funny business in option pricing. I'm going to close it out and switch to shares. So I'm in shares, looking for that pop. Probably step off somewhere around 70. Now, if it breaks down, that's okay. Doesn't really invalidate unless we drop back below 28. So got a long leash on that one, but kind of expecting that to pop on up. All right. I have a chart of the week last week. I haven't come up with a chart of the week this week yet. We'll have to see if I can figure something out. So have a great day, everybody. Be safe out there. Be careful. The account you save may be your own. Come back, see me at 5 p.m. I can't do the show if I don't have people. So thanks for coming.